Welcome back to the Deep Dive. It's Thursday, the 10th of July, 2025.
Good to be here.
Today, we're diving into some key financial news affecting Malaysia. We'll look at what's happening with local companies and then some bigger international developments impacting us here.
Right, it's quite a mix today. We'll try to connect the dots for you.
Okay, let's get started. First up, Malaysian companies. A1 AK Koh, the Premix soup maker.
Ah, yes, they're listing on the AC market tomorrow, July 11th.
And they just put out their Q3 numbers. Net profit of RM 2.7 million on about RM 20 million revenue. Sales were down a touch, though.
Yeah, a little bit. They said it's mainly distributors cutting back inventory because of, market uncertainty.
So temporary dip, hopefully.
That's what the company believes. And look, they raised RM 27.3 million from the IPO. That money's earmarked for a new factory, upgrading existing plants, and marketing. So they're definitely focused on expansion despite that sales dip.
Right, investing for growth. Okay, shifting gears a bit. AEON Credit Service, their share price took a hit.
It did, yeah. After a weaker first quarter, their core net profit came in quite a bit lower than analysts expected.
Why was that?
Higher than expected write-offs seem to be the main reason.
Does that suggest maybe broader issues, like consumers struggling?
It potentially could. Analysts have certainly flagged it. They've cut earnings forecasts, mentioning risks from an economic slowdown and inflation.
So tougher times ahead, maybe particularly for a lower-income customer.
That seems to be the concern, yes. And it might mean slower loan growth for AEON Credit, too, as they, manage that risk.
Okay. Let's talk aviation. AirAsia. Sounds like they're close to getting some investors.
Very close, apparently. Talks are nearing conclusion for potentially a RM 1 billion equity injection.
Wow, R1 billion ringgit. That's significant.
Absolutely. It's a massive step towards completing their whole restructuring plan and hopefully getting out of that financially distressed status, the PN17 classification.
And the plan is still to merge the long and short-haul businesses under one AirAsia brand.
That's the goal, yeah. Streamline everything, create a stronger single entity.
Makes sense. Okay, on to construction. Econ Pile Holdings.
They bagged a new contract. RM 27 million for piling and pile cap works.
Where's that?
It's for a service department project in Kelana Jaya.
Good news for them, then.
Definitely. It should start contributing to their earnings from the financial year ending June 2026. Adds nicely to their existing order book, which stands at around RM 404 million. Shows some continued activity in construction.
All right. And one more on the domestic front, water tariffs?
Ah, yes. The National Water Services Commission, SPAN, they've received applications from operators in 10 states to review tariffs.
So potential price hikes coming for water?
It looks that way, yeah. Potential adjustments to your utility bills if you're in one of those states.
Any exception?
Well, Penang has said they plan to delay their proposed hike until mid-2026. They mentioned it would cost the state about RM 40 million to absorb that.
Interesting. Balancing act there. Okay, let's broaden the view now. International news, starting with a big one. U.S. tariffs on Malaysia.
Yes. This just came out. U.S. President Trump announced a 25% import tariff on all Malaysian goods, effective August 1st.
Wow, all goods. That's huge. What's the immediate impact?
Well, economists are already revising down Malaysia's GDP growth forecasts. Local industries, especially E&E and manufacturing, are saying, look, we just can't absorb a 25% hike like that.
It makes us less competitive, right? Compared to, say, Vietnam.
Exactly. We've already seen the FBM KLCI and the ringgit react negatively.
What's Malaysia doing about it?
Prime Minister Anwar Ibrahim confirmed they'll keep negotiating, trying to present Malaysia's case before that August deadline hits. But yeah, it's a serious development.
Definitely one to watch. Now, related perhaps, Bank Negara Malaysia cut the OPR.
Yes, they did. By 25 basis points down to 2.75%. It's the first cut in almost 2 years.
Why now? Is it linked to the tariff news?
It's being seen as a preemptive move, really, to support the economy given all these external uncertainties like the tariffs.
So trying to stimulate things domestically.
Precisely. Lower borrowing costs. We're already seeing banks like RHB and Bank Islam announce cuts to their lending rates. That should help households and businesses, ease costs, and hopefully boost domestic demand a bit.
More tariff news, this time involving copper.
Yes. President Trump also floated the idea of a 50% tariff on U.S. copper imports. Just the threat itself caused quite a stir.
How so?
Record surge in New York copper futures, while the global benchmark price dropped. If it actually happens, it means much higher costs for lots of U.S. industries, construction, electronics, you name it.
And the impact on Malaysia.
Our trade minister noted it's another negative signal for our economy, especially any related export sectors. Just adds to the uncertainty.
Right. Okay, finally, let's look at China, their economic data.
Producer deflation, so factory gate prices, fell 3.6% in June compared to last year. That's the worst drop in nearly 2 years.
What's driving that?
Seems to be a combination of ongoing trade tensions and just weaker demand within China itself.
Consumer prices were up slightly, though.
Marginally, yes. But the overall picture points to continued economic pressure in China. The government's rolling out measures to try and stabilize things, especially employment.
And why does that matter for us here?
Well, a slower Chinese economy usually means less demand for imports, which could affect global trade, including Malaysian exports heading there. It's all interconnected.
Absolutely. A lot happening on all fronts then.
Indeed. Quite a complex picture today.
So that wraps up our deep dive for today, navigating through company news and those significant global shifts.
Yeah, and maybe the thought to leave you with is just how quickly things are changing. From local policy like the OPR cut to these sudden global trade changes, it really highlights the need for businesses and individuals like you to stay informed and be ready to adapt.
Couldn't agree more. For more analysis like this, make sure you subscribe to The Deep Dive wherever you get your podcasts and insights. Thanks for joining us.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.